Hi guys, meet me again, Cindy Himawan. So today's topic is about the sales processing. Okay, let's start. So the sales processing is also will be called with the order to cash. Okay, because the process will be start from the customer order until the customer payment, so that's why it also will be called as order to cash or OTC. Okay, so let's start. So in the beginning there will be a pre-sales activity. The pre-sales activity here is actually like including when we do the marketing to the customer. So even though it's still sometimes it can be done in manual, okay, because usually the marketing needs talking to the customer manually, but then in the ERP we also be able to record the pre-sales. Okay, so at first document we could have what we call with the inquiry. So the inquiry is actually a document whenever the customer wants to buy our product. So example, they wants to know about our product. They want to know whether like how much the price, whether they can get the specification, the availability date, and so on. So when they want to have something with our product, so we can record it as inquiry. And then we also have what we call with the quotation. So the difference between the quotation and the inquiry is the inquiry is triggered by the customer needs, but the quotation is triggered by our company. So if our company wants to offer something to the customer, so we can create what we call with the quotation. So we can send the quotation with the product and then the price and the specification and also the availability date that we are going to offer to the customer. So basically in the pre-sales, actually we only need to maintain our communication with the customer. So we want to know whether we have some communication already or not with the customer, because later on this pre-sales document can be used as a basic customer relationship management with the customer. So example, if there is customer already create a inquiry to us, it means that the customer actually can become our prospect customer, right, rather than the customer never contact us at all. So later on the marketing department, they will know which customer can be follow up. So if the customer already create inquiry to us, or we ever send the quotation to them, so it's mean these two customer can be the prospect customer. Okay, but the pre-sale is not a confirm order. So after, let's say, the customer is interested with our product, they say that they want to order, so we'll go to what we call with the sales order. So in the sales order, of course, we will take notes who is our customer, whereby in this customer actually we can split, or we can differentiate into customer what we call with the sold to party. It's mean who is order to the company, that's what we call with the sold to party. And then we also will have the customer ship to party. It's mean so the order will be sent to which address. And then we also will have the customer payer, or the one who responsible to the payment. So example, I call to the company, let's say that I want to order a bicycle to the company. So I am the one who become the sole two-party customer. But then I say that please send the bicycle later to Anna house. So it means Anna will be the customer ship to party. But then the one who pay is, let's say, Emily. So later on the Emily will be the customer payer. Okay, so it's possible for us to take notes different customer type in one order. And then we will take note the material, or in this case we will sell our finished goods, so it will be depend on the company finished goods. And then we also will take about the condition. The condition here is actually will be consist of price. Okay, so how much the price, and then the price is for actually for the finished goods or for the material. And then we also can calculate example if we have a discount. Okay, so we can put here, okay, the condition here can be consists of price, consists of discount. Okay, whereby actually the discount itself also can be usually can be differentiated into many types of discount. Like example, we want to give a fixed discount. When we say about the fixed discounts, it means that we already put the certain percentage or certain amount. Okay, certain percentage, it means that, let's say we define we want to give 10% discount, or we want to give a $10 discount. Okay, so that's what we call with the fixed discount. And then it's also possible if we give the discount with the free goods. Okay, the free goods itself can be differentiated, like whether we can, let's say, buy one or buy one get one. Okay, and then it also can be differentiated, let's say we buy 10 but we get 11 products, so the bonus is 1 pieces. Or it's also possible we give 10 pieces but the customer only needs to pay 9 pieces. Okay, so that what we call with the free goods. And then in terms of this condition, another condition type, after price discount, we also can calculate like the surcharge. The surcharge here means that we have the additional cost that we want the customer pay. Example, like they want a certain packaging, so we can give some additional amount, or what we call with the surcharge. And then we also can define the tax. The tax here means the tax can be differentiated whether we want the customer pay the included amount of tax. So if included, it means the amount that we give to the customer actually already consists including the tax amount. But if we put the tax excluded, it means later on in the invoice the customer will know how much is the price and then how much is the tax amount. And then the last one, we can define the freight. The freight here is means to charge the delivery cost to the customer. Okay, so this is the 5 types condition that we can define in the sales order. And then we can define the output. The output here means the document that we want to give to the customer, whether it will be in the form of printed paper, printed, or in the PDF file, and then we can send the email to the customer. And then in the sales order, usually there will be a credit limit checking as well. Okay, so the credit limit here is actually to limit it the account receivable of the customer. So example, if we already define, let's say the customer credit limit is, let's say 1000. So it's mean if the AR, the customer AR already reach, let's say already reach 900. Okay, the customer, sorry. So let's say the customer AR already reach 100. So when by the time the customer create an order to us, and then the sales department creating the sales order, so the system can notify that the customer is actually already reached certain amount, and so it will be needed a decision whether the sales order can be continued or not. Usually the sales order still can be created, but then cannot be continued to the delivery process because the sales order need to be blocked. Okay, so it will be depend whether the finance will asking the customer payment first, or example we already have a negotiation with the customer, and then the customer don't need to pay first, and then we just continue with the sales order. Okay, but still usually there will be a credit limit checking. And then there will be a transfer requirements. The transfer requirements here is actually to check whether the the finished goods is available or not. Okay, and then in term of MTS. Okay, so if our finished goods is MTS, then the system will check whether our finished goods is available or not. Then if it's not available, then it will calculate like, so when the goods will be available, or what we call with the ATP, available to promise. Okay, it's mean it the same things like, let's say you order to the company, and then the company say that, sorry, your product is not available now, but we can promise to you that the goods can be delivered at certain date. So that's what we call with the available to promise date. Okay, but then in terms of the, if our goods is MTO, make to order, it means that the transfer requirement will be sent to the production planning. Okay, so it's mean the later on the manufacturing order will be created by the time the sales order is created. Okay, so if you still remember, during the reordering rules for the raw material, usually when we do the reordering rules, then when we do the, in terms of MTS, okay, in terms of MTS, when we do the reordering rules, the system will check whether our finished goods is available or not. If our finished goods is not available, then the manufacturing order will be created automatically, right? But in terms of MTO, it means that the manufacturing order will only created after the sales order is confirmed. Okay, so that's what we call with the transfer requirement. Okay, and then the process will continue to create the outbound delivery. So the outbound delivery is a request from the sales department to warehouse department, saying that the warehouse department needs to send the goods to the customer. So in the outbound delivery, we can have what we call with the delivery combination. It's mean that if, let's say, we have an outstanding sales order previously, okay, it's mean that we have another sales order that haven't be sent to the customer, and then we can combine with current sales order. So that's what we call with delivery combination. So basically it's like a combine many sales order into one delivery order. Then we can have what we call with the partial delivery. It's mean that in the one sales order, example, customer wants to have quantity 100 pieces, but then we only be able to provide half of it, so we can send the 50 pieces of it first, and then later on we can send uh, another 50 pieces. So that's what we call with the partial delivery. Okay, and then complete delivery, it's mean that the when when we create the sales order 100 pieces, then we also wants to deliver 100 pieces and only consists of one sales order, so it's what we call with the complete delivery. Okay, and then we're going to move to the warehouse people. So in here is actually done by the warehouse. Okay, picking here means the warehouse will take the goods from the rack, from the warehouse, and then put into the loading area. So it will goes from the warehouse to the loading area. Okay, so in this case, actually, if we look into the stock, okay, actually by the time we create the outbound delivery, the stock is actually already blocked. Sorry, I correct it. So by the time we confirm the sales order here, our stock, so if we look into our stock, okay, so there will be the on hand, or sometimes we call with the unrestricted. Okay, so by the time we confirm the sales order, then the stock will goes to the reserve area, okay, or block. Okay, so some systems say as a reserve, some systems say as a block stock. But when we look into the total inventory, the amount, the pieces, the quantity is not yet changed. The difference is only it moves from on hand into reserve. Okay, so example, we have total 1,000 pieces. Okay, so let's say in the sales order we order 100. Okay, so by the time we do the confirm sales order, then the unrestricted become 900 and the reserve become 100. But in terms of the total, it will still showing as 1,000 pieces. Okay, so what happened during the picking, actually from the reserve, usually some system can show that from on hand, now the status is become pick, because so the block stock here, the status is already picked. It's mean that the goods already moved into loading area. Okay, and then another things that will be done by the warehouse people also is a packing. So it's mean the goods will be packed with the suitable packaging. Okay, actually in the packing things, we also can define like what is the packaging need here. Okay, and then after everything is ready, then it will be sent to the customer with the process post goods issue. So what happened in the post goods issue is actually the stock will be decreased. So previously we already have uh, 100 in the reserve. Now when we do the goods issue, it's mean this become, okay, this one is become 0, and the quantity here is become 900 pieces. Okay, because the stock is decreased. Okay, and then don't forget that whenever there is a changes in the asset, it's mean that there will be accounting document generated. Okay, it's mean that there is changes in the value stock. Okay, so this in here I put wrong, it's supposed to be the value stock will be decreased. Okay, because the stock is also decreased. Yeah, so later on, okay, Okay, will be decreased. Okay, so later on the journal created will be the inventory finished goods, because in the credit, because the inventory decrease, yeah, that's why it's in the inventory finished goods. And then the debit side will be GRIR, goods receipt, invoice receipt. It's because uh, the GRIR is actually supposed to uh, uh, take notes of the cost of goods sold, okay, but because we want to make sure that the cost of goods sold will be posted together with the account revenue later on, so that's why in the post goods issue we put temporary in the goods receipt and GRIR account. Later on, remind me to explain during the discussion about these things, okay? Okay, and then after we do the post goods issue, the order status will be updated. It means that the delivery process considered done after we do the goods issue. And then the next step, we will create the customer billing. Okay, so the customer billing is actually to bill the customer so they can pay. Okay, so there will be usually the invoice will be based on the delivery. It's mean that if example we only example in the sales order, the customer order 100 pieces, but if let's say in the delivery we only deliver 70 pieces, it means later on in the customer billing we only bill for 70 pieces. Okay, and then it's also possible if we do the collective billing. It's mean that for many, okay, it's also possible if we have many delivery that not yet billed to the customer, so we can do what we call the collective billing. It's mean we will combine many delivery order into one customer billing. Okay, and it's also possible if we do the split billing. It's mean for one delivery we can split into some billing. Usually this will be used if there is a down payment, yeah, so the customer can pay into several terms. And then there will be accounting document that the AR and COGS will be created together, yeah. So the debit will be in the AR will be created in the debit, because AR is considered as our asset. Okay, the AR is the customer account receivable, and it will consider as our sales revenue. And then we also will notes of the COGS. Okay, so the COGS that previously supposed to be in here. Okay, and then it goes notes later on during the customer billing, the COGS will be created. So if you see here, the GRIR will be deducted. Okay, so it will be remain COGS and inventory finished goods. Okay, so after the customer billing, and then we can do we can receive the customer payment. So when the customer payment, then we can create a payment register, and it means that there will be another accounting document created saying that our bank increased and the AR is deducted. So that's why if we see in the journal that will be created, the debit is will be filled with the bank because our bank is increased, and the AR is deducted because customer already paid. Okay, so that's all the process of order to cash processing. So I hope you understand, and let's go to the discussion session. Thank you.